Our next panel, we will talk about investor protection. Where do we stand? Because investor protection is all about making the investor feel safe, making the investor feel that he has an equitable playing field, and that is what will compel the investor to invest more and more, feel comfortable investing in our markets. For this session, we have our moderator as Mr. Hemant Majitia, who's also our vice chairman of BBF. We have Dr. V.R. Narasimhan, who's the dean from School of Corporate Governance, Mr. Kushur Balsara, Head of Investor Protection Fund, BSE, and Mr. Dheeraj Reddy, MD and CEO, HDFC Securities. So over to you, Hemant Bhai.
Thank you, Alok. Good morning, ladies and gentlemen. Hope you enjoyed the first session on the expectation of the Indian retail investors. I'm Hemant Majitia. I am the vice chair of BBF. I'll be moderating the second session on investor protection. Where do we stand? We also have a very illustrious panel who will enlighten us on one of the most important topics for the World Investor Week 2020. As we know, this is all about investors, their expectations, their education and protection. I would like to just interject here that if you have any questions, please post them on the questions tab at the bottom of the screen, and we will try and take them at the end of the session. So let me introduce our panel today. Alok has already done that, but let me just repeat. We have Dr. Narasimhan.
Good morning, everybody. Good morning.
Yeah, he's a Dean of School of Corporate Governance and Regulatory Studies at NISM, the National Institute of Securities Markets. We also have Dr. Kushur Balsara, Head of Investor Protection.
It is Mr., not Doctor, not as yet.
Good. Welcome to the club of doctors. Okay.
Thank you.
And we have Shri Dheeraj Reddy, MD and CEO of HDFC Securities. So let me start by enumerating the three objectives of IOSCO, which is the International Organization of Securities Commissions. The topmost objective is investor protection. The other two are ensuring markets are fair, efficient, and transparent. And the third one is reducing systemic risk. So let me start by asking the first question to Dr. Narasimhan. Narasimhanji, we have recently seen the fast emergence of new age young investors. Internationally, this is manifested by rise of Robinhood markets in the US. And we also have our own Zerodhas and Upstocks, which cater to this young investing populace. What, in your opinion, are the avenues available to the new age investor for education on investor protection, and whether we have done enough to make these investors aware of the various product and trading risks? Because we have seen, people coming in fresh, and we want to see that they don't burn their fingers in the first attempt in the markets. So over to you, sir.
Thank you very much, Hemantji. In terms of avenues for investor education, there's no dearth at all. The point is that how the youngsters are taking the information, that's more important for us. It's like our the corona issue. People have to have masks on their face when they walk in the streets. Everybody knows it, but nobody wears it. I mean, as simple as that. So investor protection avenues are plentifully available. I'll tell you, I think the market intermediaries, industry forums like BBF, MIIs, brokers individually, mutual funds, and all the government bodies, etc., they have a lot of information available at their internet sites, published literature, the video clips, and so on and so forth. The point is, are we able to have a coded list of places where we can go? I take your question as to be able to give you at a single place what is available. I personally believe that the difference between investor protection post an event and investor awareness is like giving a fish and teaching fishing. Teach them fishing, he will eat forever. Give fish, he will eat for that one day. Investor protection, after an event happens, to protect him, compensate him is different, but prevent accidents to occur by giving him adequate education That is the primary requirement. There is something called, I don't know how many, most of us are aware, that is the National Financial Inclusion Strategy 2019-24, which has actually designed a multi-pronged strategy towards financial inclusion and financial literacy in our country. Even before this strategy paper came in, I think it has drawn a lot of lessons from what all of us are doing. For example, stock exchanges, BSE, NSE, depositories, NSDL, CDSL, MIIs, AMFI, BBF, NME, all these people are doing a lot of work already that has been consolidated and given a kind of a formal structure. There are three broad delivery methods in which the investor education material is being made available. One is that free and anytime access information and literature on the internet and publications, free and scheduled programs at schools and colleges, and free and scheduled programs, investor awareness programs, which are being conducted by regulators and MIIs, etc. To just give you a list, I mean, I don't know if investors can go into investors site within SEBI. It's a microsite within SEBI's site, where there's a lot of information available in 12 languages. In 12 languages, all the information that is basically required to somebody to come into the trading or somebody to do any financial savings or to deal with finances, it's plenty available on that investor site. People have to go and look at it. There are beautiful audio visual clips also, which are profound in terms of delivering a particular investor protection and investor education message. We have one more body called as NCFE, National Center for Financial Education, which is set up by 4 regulators together, IRDA, RBI, SEBI, and PFRDA together. They put up this organization, which is hosting a lot of audiovisual clips and some literature on their site. There is some shortcoming in this. They have to update this site and they have to update the literature, but a lot of work is being done by NCFE also. It is for us to go and look at that particular site. All the MIIs have come together and published one common booklet on securities market, and it's available on everybody's internet site. You just have to download and read it. It's available. NSDL has published about some 7 or 8 booklet, some useful literature and downloadable format on their site. And then, in addition to this, you go to postal site, etc., where you get a government saving schemes. You go to LIC site, you will find out a lot of insurance related schemes. That every product seller has got a lot of literature on his site. In addition to this, that is a third party kind of a view is given by the MIIs, regulators, etc., as I listed above. All these are video clips or books which can be downloaded and read, and most of them are available in regional languages as well. In addition to this, it is actually commendable that 3 institutions, BSc site, NSE, and NISM, they are doing a lot of work at the college and school level, and they conduct a lot of programs. I'm told BSc has done about 1,000 programs in the year 2019-20. 1,000 programs in one financial year, not a small number. NSC says it has done about, it has reached about 57 lakh students in the last 1 decade. NISM is conducting at an average about 700 to 750 programs every year. Its program is famous as pocket money program. So that way, the beauty of all these efforts is that it's not a one-time effort. NSC, BSc, SEBI, all of them have institutionalized this mechanism of investor education by setting up their own educational initiatives in the form of an organization which are conducting these programs in different ways. These are all for creation of financial education at the basic level. In addition to this, there are some investor awareness programs being conducted in the country. When I say investor awareness program, I mean people who have got investable surplus or potentially who could invest into the market either through mutual fund route or through the direct participation route. There is available there, and a lot of work is being done. I just go in the hierarchy like SEBI to start with, and then our market institutions. SEBI is doing a lot of work by doing what is called as a resource person program. They have appointed resource persons who are trained to conduct programs for various hinterlands in the country. That way, today the investor awareness programs have reached the tier 2, tier 3, and even remote places wherever there is money possibility, whether potential investor is there, there is a kind of information is going there. The resources persons will schedule a program and go and deliver a investor awareness program. SEBI has created a standardized deck of presentations for them so that the information carried to them is standardized and it does not have much of variations. In addition to that, NSC, BSc, NSDL, CDSL, AMFI, everybody is doing a lot of program. I'll just give you reload some statistics for the sake of, you said what are the avenues. I'm just want to say what are the avenues. Do you know that BSc IPF has done about 6,200 programs last financial year. NSC has conducted 600 plus programs last year. CDSL has done about 450 programs. NSDL has done about 600 programs. In addition to that, NCDX and NCX are also doing a lot of programs to cater to their particular constituency. AMFI, because of the regulatory changes, has started doing a lot of work. I'm told that they have done about 250 plus investor awareness programs in the country. That way, I think there are several financial literacy programs available on the internet and YouTube even by private individuals and private broking firms or etc. to attract the investors and communicate the message. I think there is enough avenues are available. Only thing is that we should reach them. I'm not saying that's the end and that's enough. A lot more can be done, but we are not doing. We are doing enough for this already. That's what I would like to say. Hemanji.
Thank you, sir. There's a lot of information, and I'm sure this will a lot of things we were not aware. In fact, on BBF also we have been doing a lot of programs in collaboration with the MIs. Our Dr. Aditya Srinivas is spearheading this. And on the new age thing, I was just thinking that the new age young population is is more Instagrammable, and short video messaging, and so I think all the MI should also look at reaching out in the short messaging format to the new age young investor. Thanks a lot, sir. Mr. Balsara, recently we have seen many regulations to protect investors from intermediaries, such as reporting of customer balances under enhanced supervision, regulation to maintain digital physical record of order placed, maintaining clear balances, bank balances to the extent of total creditors, and margin pledge is the latest regulation that has started. Also, we have, when we look at the exchanges data on investor complaints specifically, there are 15 million active investors this year. And the number of complaints filed have been around just 15,000, which is less than 0.1% of the active populace. So, and for 50% of those complaints have been resolved at the exchange level itself, and they don't even reach arbitration level. Now, my question here in India, a very enviable statistic. Shouldn't we be proud of this? That out of 15 million investors, less than 7,000 complaints are actual. Come in, and they also resolved quite well. I mean, the whole complaint infrastructure, the way it is set up, it's a very squeaky clean kind of a scenario. And what more needs to be done at the regulation level, if at all?
Thank you very much, Hemanji. And first of all, congratulations to BBF for this wonderful event that they've put up along with IFIE. And we all really appreciate this. Incidentally, I would just like to give a couple of comments on what Mr. Narasimhan mentioned earlier, if you would. So, like he mentioned, this common securities booklet, so many programs and all. So yesterday, the World Investor Week started, as per SEBI has decided November 23rd to 29th. And we had a bell-ringing ceremony at BSc. And so we did a very interesting initiative. We converted this common securities market booklet to Braille. So even blind people can read and understand what the basics of what SEBI and the MIs are trying to put out. Thank you, sir. So that's Sir Mr. Garg, Executive Director, SEBI, really appreciated that. And further, we also, you were talking, Hemanji, you were talking about social media, and youngsters are much more on social media. So we have put up 67 videos related to investor awareness and education, picking up different topics. So they cater to the youngsters, they cater to elderly people who want to start looking at investment. They take up simple topics like what is IPO, what is compounding, how that benefits you, whether you should go for long term, do's and don'ts of investing. Sir, from those 67 videos which are already there on YouTube, we picked up 5 videos. We had sign language, somebody come in and do sign language and superimpose that on the videos. So the deaf can also avail of these videos, and we are slowly going to
Wow.
progress that to more videos. So that is where we're trying to look at financial inclusion, and we hope that we spread the message to more people. But as Mr. Narsimhan said, the avenues are so many. It is something like mutual fund. So many schemes. किसमें invest करूँ वो मुझे समझ में नहीं आता है. But as again the adage goes, you can take a pony to the pond, but you cannot make it drink water. Like he mentioned, we have 6,200 IIPs conducted last year. In this World Investor Week itself, we are going to conduct 300, and other MIs are conducting IIPs. But people should take interest and come. We keep on holding these IIPs, and we send out emails to that area. We're trying to focus. Sometimes it is in regional language. So we send out 1.5 crore emails, but sir, the attendance is barely 60 or 70. So I don't know whether the investors are not aware, they are not getting the emails, we don't get any bounce backs. So I'm just wondering that so much is available in the space. People need to just decide what they want to read up a little, and then participate in the market. Coming to your question about whether there is, there may be an overdose of regulation or not. Sir, I'm sorry, but I will be very frank. I frankly think that there isn't an overdose of regulation. In certain places, there is. It does happen. Sometimes some policemen may catch you for just, cutting into one lane a little bit also. Some guy may say, chala, chala, jao tumhe. So it all depends. Certain cases there could be overzealousness, but largely regulations are must. You mentioned about complaints being very low. So, sir, according to me, the answer is in the question itself. Because of so many regulations, because people are behaving themselves, the number of complaints is very low. Also, another reason for the complaints being very low, I feel so, is people are very scared to come up, or they don't want to get into it. They say, "Arey, jhanjat kaun karega, complain, then I have to give so many documents, then again he will ask me." Sometimes people initiate the process, halfway through the process, so many questions are asked. Sometimes the people who are resolving the complaints are just behaving like postmen, taking the complaint, sending to the company, taking the answer from the company, giving it back. People get fed up, and then they stop pursuing the complaint. But when the complaint is closed, they again start another complaint. So these are certain issues. Also, I would say there is lack of awareness where to complain. Something very simple. I'll give you a very simple household example, not related to securities market. My dishwasher conked out a few 3 months back. It was a very reputed US company which is doing marketing in India. I complained, kept on following up. The engineer would not come. In between, he said he got COVID, so he's out for 15-20 days minimum. Finally, I managed to go through the company secretary, since I was in listing compliance before. I requested, please look at this, otherwise I will be forced to file complaint with Consumer Forum. And they said, no, we'll send somebody. Finally, they came, they did some. Now, we will take your machine back and give you the money minus 20%. So it's hardly been 1 year, it's under AMC. Why? So what I'm trying to say is, in India, customer is king, consumer is king, but only till he buys the product. After that, he is thrown away like a dish rag. He is not responded to. People don't care. एक बार वो फंस गया ना, बाद में तो देखा जाएगा. We'll see. So if we show the same alacrity for acquiring customers, and we show that same alacrity for responding to customers' complaints, I think this will be heaven on earth. But sadly, that is not the case here today. Even things like, despite all these regulations, we had a Karvi, we had an Anugrah. Today, Karvi has been declared as defaulter by NSE. Would anyone in their right senses have thought such a big name, ऐसा कुछ हो सकता है? लेकिन हुआ. So what I'm trying to say is, anything can happen anywhere, which is why regulations are required for ring fencing the investors and keeping them protected. Now, despite everything, we give do's and don'ts in every IAP. It is mandatory for us as well as our resource persons who do programs for us. Mandatory to talk about do's and don'ts of investment. Don't leave your DIS book lying around. Don't to your broker. Don't give power of attorney unless absolutely mandatory for you. Despite that, people do it. ये सब बताने के बाद भी लोग करते हैं. So अभी आपको खुदकुशी करना है तो all the time policemen cannot be there to stop you from jumping off. So we can only counsel कि भाई ऐसा मत करो. Then it is up to people to handle it.
Kushoi,
And sir, unfortunately,
if I can interject for a minute, in your example,
sure.
वो खुदकुशी करने के लिए he will jump, but he thinks he should be alive. That's the problem in the regulation today. Yeah.
No, more. If he survives, he'll say, why did you not stop me from jumping?
Correct.
वो दूसरा है. हाँ, MIS को सेबी को पकड़ेगा कि बॉस तुम ये ऐसा कर रहे हो वैसा कर रहे हो. And sadly, sir, in India, in fact, I think maybe all the world over, regulation is like a game of whack-a-mole. Whack-a-mole, अभी resort वगैरह में जाते हैं बच्चे, you might have seen, there is a board. There are holes in the board, and there is this small mole which keep popping up. So you are supposed to take a plastic or a wooden handle, hit it on the head. मारोगे तो नीचे चला जाएगा, लेकिन दूसरे साइड से ऊपर आ जाएगा. So you have regulation, you stop one entry, another side, someone very creative people interpretation, and they will violate again. So again, SEBI will bring regulation. So the problem is because of few bad eggs. Everybody has to go through that regulation, even the highly compliant people. For example, I'm just giving an example, I'm just not taking names. The Infosys of the world, Wipros of the world, or the HDFCs of the world, despite being very compliant and looking after their people, more and more regulations come, they get frustrated. Boss, abhi kitna karega hum log? Another last example I would like to give, sir, related party transactions. This is the brokers and investor ki baat alag. Let us say investors who invest in companies. Related party transactions, there is rampant abuse. If you talk to Mr. Jane Gupta, he will give you a 300-page book of all the cases, all the reports he has put out where there has been misuse of related party transactions by companies, not enough information given to investors. They just vote blindly. Haan, theek hai, ye resolution hai. Most people don't vote anyway, but those who vote also may just vote blindly. So SEBI came out with a discussion paper. The problem was, in my personal opinion, sorry, I was on that committee also, but maybe there may have been little overzealousness in that. So because of that, people made such a big hue and cry about it, and the entire discussion paper got dropped. And apparently, as of now, there is no change proposed in the regulation. Simple transparency. कि जो आप RPT goes to the board, what all basic minimum stuff should go to the board. Those kind of things at least could have been introduced while leaving out the radical reforms. But at least this kind of transparency could have been done. So investor को भी पता लगता है what he's voting for. Today he's in the blind. We look at RPT of even the largest company by market cap in India. You look at their RPT report. You will not get any details. The investor समझ में नहीं आएगा. There is a list of companies and there are some against that. We have done RPTs. What? Where? With whom? Regarding what? Who benefited? Nothing is there. So, sir, I feel in some regulations are absolutely necessary. Maybe more regulation. Until people keep on doing wrong things, more and more regulation is going to come. So there should be a decent amount of practical regulation. Number one. Number two, affected by it should be involved in framing it. If you ask, a huge broker to come on a committee and you take out a regulation which hurts all the small brokers, then obviously there is going to be some kind of angst that boss, humko kya, you're driving us out of business. Third thing I would like to say that traditions always have to be respected, but investor protection comes first. So you may be have a tradition that I always have trusted. Now I'm allowed to put margin with the broker, and I'm not allowed to do transactions on credit. Boss, it is for your safety and for other investors that this is happening. So आपकी safety के लिए. Yesterday I met one Parsi gentleman in my building. SEBI is super inaiko. All this, there are so many regulations. I'm no longer able to trade on credit with my broker. I told him, uncle, it is for your safety. It is for safety of investors that it is being done. So when a regulation comes, if MIIs and SEBI hold several talks explaining why this has been brought, iska reason kya hai, what they hope to do with it, and how to execute it, so that people don't take out their own interpretation, they don't take out their own loopholes. If this kind of communication and sharing is done, I'm sure the acceptability of the regulation will also be much higher. So the recent circular which SEBI has given on SOP for handling investor claims for defaulter members, it is very well drafted, and SEBI has made a nice time-bound approach that within 90 days maximum, claims bhar dena chahiye. You should pay off the claims after he's declared a defaulter. So those kind of things are progressive and they are in the interest of the investor. So in sum, sir, I feel regulation, SEBI is a very proactive regulator. Really hats off to them for that. And we need to understand that the regulations are 95% of the time really good for us, and it's for our protection. Thank you very much.
Thank you, sir. That was a very, very well-rounded analysis. But let me tell you that, you know, on the question of the investors in the financial markets wanting to file a complaint, every broker's homepage of the website has email ID, and we have seen at the broker level, we have seen that investors on the smallest of pretext are even on service level, service issues, they straight away write a mail which goes into the scores, and then finally it comes to the exchanges and to the brokers to resolve it. So so in our industry, at least, we have seen that customers have been able to really approach the regulator on complaints very easily. So this is just a small point I would like to make.
Sure, sir.
Hemant, if I can add a small point here. Number of complaints, the number of brokers against which complaints have been raised is about 200 unique brokers against whom complaints have been raised, out of the about roughly 1,600 active brokers in the country. Even among the 200, I think more than 150 or 160 brokers have less than 10 complaints against them.
Yes, sir.
From these statistics I have seen, it's a very good thing because people are aware of their protecting their image, and they know that in complaints come against them, their business will be impacted, and therefore brokers are taking necessary care. Anugrah Karvi kind of people are an exception. I think wherever possible, we'll discuss about it as we go forward. Thank you.
Yeah. Okay. So I think we are, on to a good discussion. I'm very excited. So, coming to you, Mr. Reli, your firm is one of the largest retail financial intermediaries in India. We have many times in the past heard that retail should be veered towards professional money management like the mutual funds. Where, in your opinion, do we strike a balance between educating a retail investor and letting him take his own decisions of investing and taking his own risks versus disallowing certain products to him on the assumption that he does not have the ability to take such decisions? There's a very, in the last 2-3 years, we have seen this conflict being there. So what is your view on this? Because you have been you have looked at all the facets of investing, or you have investors on the stock market, direct investing, as well as mutual funds, as well as AIFs. So you're on mute, I think. Yeah.
Thank you, Rajiv. Thank you for giving me this opportunity. I think it's a wonderful forum and compliments to the organizers for such events. My take on the retail investor is that in last 2 decades or so, we've seen a lot of evolution of retail investors. And that's something, we've seen post-COVID scenario, there is a certain spurt in the retail investor participating in the direct equity. That's what has become the bone of contention in last 6 or 8 months or so. And as, Suji mentioned, that Robin Hood, kind of scenario. But I think I would give credit to the mutual fund industry for doing a great service to the retail investors at large by giving them various options. And I remember in early 2000 when I used to be in ICICI Bank, mutual fund industry was absolutely new, and concepts like SIPs were very new, and the industry has done commendable job in terms of reaching out customers, educating them on mutual funds, various types of mutual funds, and so on. So that way it has really evolved big time. And similarly, I think brokerage industry also has been servicing the HNIs and retail for very long and been taking care of them. And I think we should take due credit in terms of reducing the number of complaints, or per lakh complaints are minuscule. We have a well-rounded whole, complaint redressal mechanism in place. But why complaints going to the exchanges or even to the arbitration and so on are getting resolved even at the brokerage level? I think the brokerage houses are doing a decent job. We can leave the aberrations of a couple of names which were mentioned. I don't want to take the names. We can leave few aberrations, but more or less, I feel the industry has been doing a great job in terms of assuaging all the concerns of the retail customers also. With the advent of smartphones, technology, this has even accelerated big time, because now there are no disputes. It's more transparent. There are trails in place in terms of transactions between the customers and brokerage houses and exchanges. So there is the technology has added to the transparency more. As far as regulations are concerned, I think regulations are required. Definitely, regulations are required, as long as they are not draconian and not, stopping the business. I think I would wholeheartedly welcome the regulations, and recent introduction of pledge and repledge mechanism is again a very good mechanism, though it gave us some teething troubles to the industry, which, when you go for a massive change like that, you would definitely have your own teething troubles in these kind of environment. Particularly, we had a COVID kind of environment accentuating the problem for us to migrate to the new system. But coming back to the question, I think investors are nowadays more informed. They read a lot. There are multiple content that is available in different forms, whether it's in videos or print articles, or electronic mechanism. So they are reading a lot. They are learning a lot on their own also. Brokerage houses, SEBI, exchanges, everyone has actually rallied along in terms of educating the customer. I see NSDL, CDSL doing so many road shows at the ground level also. So depositories have also taken part. Having said that, suitability assessment is definitely needs to be done at the investor level, because all products are not suitable to all customers. If there are new customers who are not familiar with underlying risks in the equity investments in equities, derivatives, or particularly commodities or currency and so on, then there has to be some checks and balances that should be in place, so that the retail investors are it's very difficult to get retail investors. So we moved from a 5 million to a 10 million and 10 million to 15 million in no time. But to get first 5 million took us about decades. Then to get to the next 5 million, it took us another long period. The last 5 million was easy to come by. So to retain that, I think the onus or the responsibility is with the intermediaries to ensure that there are right set of products are offered to them. Like I give you a simple examples in the direct equity. There are instances where there is a visible complete erosion of capital. Then as intermediary, one has to stop offering these products to the customers. We did it in the Lakshmi Vilas Bank case. There was complete erosion, so we stopped buying further buying in that. Many brokerage houses did the soft nudge, hard nudge in those cases. I think by leveraging the technology, we can do soft nudge. We can also put a hard stop on certain things. If we feel that the profile of the customer is not suitable to take certain products, we have to stop those products and make those privileges slightly more difficult for customers to after doing proper assessments only. If they are offered all kind of privileges are offered along with the account opening without even verifying certain details and suitability, that would lead to more accidents. So as we are creating a highway, which is very good. We should create highway, but at the same time we avoid accidents, minimize the accidents, and have a mechanism in place. So I think today's retail investor is far more informed. We have to offer all possible products to them with right checks and balances would be my sum and substance of what I was trying to articulate for retail investors.
Suitability and soft nudge, hard nudge is actually that's the right way ahead. In fact, I was just I remember a few years back, we had one client had come and we had our research guy had said that since you don't do direct equity, since you are not your suitability is not there, you better put in mutual funds. So after a few years of putting in mutual funds, he came back to us and said that I don't understand mutual funds also now because it's become so complicated. There are various different schemes and sectoral and international. So I'm sure this is a continuous process of educating ourselves and educating our customers and going ahead. So thanks a lot,
Beauty lies in making things simple for the customers. If we make things more and more simple in terms of whether it's product, processes, platforms, that would make it more easier for us to serve existing customers and probably get confidence of prospective or new customers as well. Yeah,
that's well said. That's very wise. I thanks a lot. That's very good. Yeah, and one more question I would like to just touch upon. I will look at the other side. We have seen many times in the past that investors lose more money on one errant company than all the errant intermediaries put together. Have you been able to do much on that side, except just delisting, which also leads to a loss of opportunity to exit for the investor? Nasimanji, can you take this up?
It's a very interesting question. It's a very interesting question. And lot is already done, which we are not aware of, which are not recognizing it to be so. As Dheeraj said correctly, let them go to mutual funds to start with if they are not sure of trading in direct equity themselves. But if they want to trade in equity, there's nothing stopping them. Please let them come into the market. For example, BSE has got different grades of stocks. Like say, we've got a Z grade stock, we've got A grade stock, we've got a B grade stock, etc., etc. What are we trying to tell? Exchange is clear cut informing the people saying that it's a Z grade stock, take care. It's already saying that. In fact, you look at trade for trade kind of a platform in which they says, here you can't take positions, you've got to settle each bit stock by stock. Is it not enough information and communication to you? You have got periodic auction platform. There some stocks are put in the periodic auction. What does it mean? Khatra hai. That is smoking injurious to health. Take care. When you want to still smoke, we can't do anything about it, but that's very clearly stated. More importantly, we also have what you call, I think exchanges are put up list of companies which have incurred losses for the last 8 quarters. List of companies which are selling below par. This information is available on the stock exchange site itself. It is for the investor to get into the exchange site and see what is the communication that they are getting. That's important. And more importantly, I will say that one step that can taken up further is that in case a company has been incurring a loss for the last 8 quarters, can exchanges and depository take one more step of saying that, my dear, right into the saying that in this company, the company has this particular script, it has been incurring losses for the last 8 quarters, full stop. No view expressed. After the quarter results are given, send in information to the shareholder saying that he can take a view himself and then do whatever has to be done, that he can be done very well. Nextly, I've been talking to stock exchanges when I was in NSE that we need to tweak the continuous listing norms in a way that adequate information flows from the exchanges on MIAs and regulators to the stock investor concerned, so that he will be able to quit even before the company goes into delisting stage. Delisting is the eventual and last stage. Even before that, you are able to retrieve some kind of a value out of the stock. That's much better. So continuous listing norms have to be changed. Continuous listing norms are available in other jurisdictions. We can tweak them and adapt for them. We can do a lot of things. I agree that this is an area where something more has to be done, because if the is put to the company to delisting, you don't know what happens. We have been, myself and Mr. Kushro, we have done a lot of work on delisting on certain companies. We know that investor does not get anything out of this process. Once a company goes to delisting, promoters don't take any interest. They may have a value, they may have a asset, but that cannot be liquidated for this purposes, and therefore delisting is the last option. Well ahead of the delisting, we need to erect certain kind of a communication possibilities so that the investor is able to take right decision and get out. This is one area where we need to do something more. Whatever is being done also to be understood in those lines. The moment stock is moved to trade or it goes to Z stocks, etc., etc., investors have to react and they take appropriate decisions. That's my view.
Thank you, sir. Anybody would like to? Yeah. Yes, sir.
Yeah, sure. So, among investors seems to be कि ये स्टॉक एक्सचेंज ने कंपनी को डिलिस्ट कर डाला, हमारा नुकसान हो गया. But they are not aware, although it is there on our website, there is a very detailed process. Delisting is the final severance of the relationship, which you have done through the listing agreement, which is now formalized in listing regulation also. So it is not something which is done very lightly. There is a, first of all, the company continuously has to give, as Mr. Narasimhan said, under listing regulations, several information to the investors to keep on taking an informed view. So they're supposed to file financial results, shareholding pattern, corporate governance report every single quarter. If they don't do for a quarter, then there are some fines prescribed by SEBI. We fine तो company भरती है नहीं, एक non-compliant company तो fine भी नहीं भरेगा. So what we went ahead and we discussed with SEBI and implemented was promoters' accounts will be frozen. So their entire demat account, not only the shares in that company, the promoters, whoever is declared in the by the company themselves, the shareholders, as promoters in the SHP or shareholding pattern, their entire accounts are frozen. They cannot do anything. Towards March, sometimes you need to do some profit taking or whatever it is. They've sold shares and they found that their demat accounts are frozen. Despite us sending them individual email, sending email to the company secretary that their accounts are frozen, please comply, pay the fine and start again the company. But they are not doing it. And then only as a final step, suspension of the company from trading is done because it hurts the investors. We want to keep it as final step, not as the first step. After this, 6 months of suspension होने के बाद, we keep on writing to company, please come comply, get listed, trading again, not listed, sorry, trading again. They don't come. Then we send show cause notice. We send a newspaper advertisement so that all investors can go. It's a pan-India newspaper. Then we take it to delisting committee, delist the company. Sir, there are instances 1 year after delisting, company has gone to SAT and said कि मुझे hearing नहीं दिया. We sent so many letters, you never responded, you never came for any interview, you never even sent an email to us saying that I'm interested in getting my suspension revoked. But since you're delisted, after 1 year also you've been entertained, chalo, we want to look at investor interest. Again, we approach the promoter, yes, please come, SAT is ordered, we are reversing your delisting, you please come and get complied. So there is enough opportunity given. And one most important thing, at our cost, at the exchange's cost, we are appointing valuers, what chartered accounting firms, for giving a fair value of each company based on the latest available financials in the public domain. तुम्हारा दोस्त कंपनी ने बैलेंस शीट फाइल किया है, इसके बेसिस पे the valuer comes at some fair value until, even after they come back to trading, until they pay the fair value to each and every investor, they are freeze on their demat account. So we are trying as far as possible to help the investor, but delisting ultimately some companies for 17 and 18 years once upon a time in BSE, they were just lying there just like that. No investor has ever complained, no promoter has complained. We tried to revive them. Some of them came, got revived, started trading. The rest of them were delisted. Till now, nobody has done anything. So yes, investor does suffer, but we are trying our best to see that it should not go to that stage. And if it goes to that stage, whether we can reverse it. So that is something. And in voluntary delisting, I would like to say that SEBI has done a lot of good work. There's a new discussion paper come out on for certain further safeguards. They want independent directors to also give their opinion on whether the voluntary delisting is in the interest of the investors or not. They've reduced the time period. So those kind of things SEBI is doing for voluntary delisting. But as you know, certain companies still, the pricing is the major issue. Investor को क्या price पे मिलना चाहिए, but that's a separate discussion altogether. Thank you.
That's actually a lot of things we were not aware. At least I was not aware on the pre-delisting, whatever action is being taken. Mr. Relly, on the broking side, as brokers, what do you think we should be doing on such errant companies? You think we should be more proactive, or we should leave it to the wisdom of the customer, whatever he wants to do?
I think the delisting is the last nail in the coffin. So a lot more to be done much before the delisting. I think it has got to do with the greed of the investors also. I think we have to manage the greed of investors as well to start with, and help them in educating and understanding that they should not be risking their capital into the unknown names or some of these companies which are more prone to frauds or where the financials are weak. So there can be, n number of indicators that can be flagged before even we go to the last step of delisting. If there are liquidity related concerns, that should be highlighted that this stock is fairly illiquid stock, so please do not get into these stocks. The brokerage houses who are giving knowledge, they should stop giving leverage in some of these stocks based on the criteria. They can have their in-house criteria, like we do margin trade facility at HDFC Securities. The exchanges have permitted us a list of 1,000 plus scripts where we can offer, but with our internal due diligence, that list is less than 400 for us. So we do not give leverage to all the companies. So there are many steps which one can take. You can continuously look at the research. We are a full service brokerage house where we do offer research to our clients. Also, we recommend our clients to invest only the stocks where we are giving them active research calls. So some of these steps we take. I think more can be done in terms of flagging, nudging customers that these are high risk companies, particularly companies which are penny stocks, companies where there are visible problems or frauds, or there are forensic accounting related issues. These are, I think, as an intermediary to protect investors' capital, we have an active role to play. We cannot, pass the work only on the exchanges or regulators in this area.
Right, that leaves
even in the retailers, when you go somewhere in a grocery store, if something is expired, the grocery store guy will tell you that this product is expired, please don't buy this product. So somewhere, the responsible intermediaries, because they want to retain customers, because they want to take the customer along for long period of time, they must do these things. I think somewhere, some people are not doing it. Many of them started doing it and will. I think this is the future.
Yes, Mr. Bazar.
Hemant, just one thing I just can't resist adding. That earlier on somebody from BBF mentioned that you have majority of investors, you are not brokers. So one piece of advice we always give, and I would really like to reiterate again. One of the most tempting things, as Dheerajji said, is most tempting is to receive SMS. This stock has fallen from 10 rupees to 2 rupees. Buy now, instant gain, 2 weeks. So, I'm sorry to use this very crude thing. लार टपकती है investor की. अरे बस चलो 10-20 हजार शेयर लो. 50,000 worth 40-50,000 worth investment they will do in instant. TV खरीदना है तो they will wait 5 people, they will ask, they will wait for 10 days and then buy the TV of 45,000. This kind of thing they will invest immediately. When it goes to few paise, complaints start, stock exchange में complaint लिखो, ये लिखो, देखो ये company ऐसे है. As Dheeraj ji very rightly said, please go to your broker. Don't be enamored by these kind of very quick offers to make money. Anything which offers you instant nirvana or instant returns, please avoid. Anything which offers you huge returns, please avoid. And immediately go and ask a broker. He's the right guy to guide you. Thank you.
Right. Thank you.
Hemant, if I can add one sentence. I would urge all the broker friends on this particular participating here to take the information from the exchange's site. As Mr. Khushbu said rightly, quarterly a lot of information is being added on companies. And let us assume for our shareholding pattern, if somebody observes that over a period of last 4 quarters, institutional investors have been exiting the company, I think we should tell our retail friends to exit the company as well, because they'll be having definitely a little more information, or they would have more analysis done. So there are a lot of information about the stock exchange sites. It has to be read. It is for the investors to read. So brokers can consolidate this in learning from them and then try to inform the clients. They can take a lot of things. They don't have to wait until delisting. They can take a lot of decisions well ahead of delisting is what my suggestion is.
Yeah, Dr. Narasimhan, I see here actually, the association can do something there, where we can come out with some kind of advisory for the members to tell their investors. So thanks a lot. I think, I am getting a soft nudge, as Dheeraj was saying. Next session is starting. Nilesh Bhai is also here. So, a big thank you to our panelists for their in-depth and candid views. And for our investors, may you have a profitable and safe investment experience. Thanks a lot. Alok, over to you. Thank you.
Hemanji, very well moderated session. Thank you so much.
Thank you, Hemanji. Thank you.
Namaskar.
Thank you. Thank you.
Namaskar to Nilesh.
Before you go, Khushru, one question from my side, and I would love that if you could reiterate to our investors out there that what is the limit of protection given by IPF to every investor who invests on Bombay Stock Exchange or National Stock Exchange, and how does it compare with the banking? I just can't resist this question.
Sure. So IPF, it's like COVID vaccine. When everything else fails, finally we come with the vaccine and we try to put some balm on the investor's wound by paying them maximum 15 lakhs per claim that they have made against the defaulting client, defaulting broker, I'm sorry. We pay that, and that is provided it is done on the exchange. Lot of do's and don'ts are there in that. Sometimes the claims get thrown out because, it is not really a transaction done on floor of the exchange. Some kind of financing transaction, etc. The last step. So a lot of protection comes before that.
Yes. No. So, and how does this compare with what the RBI is offering, or public sector banks or scheduled banks offer?
I think it's more or less the same, but probably they may not be doing as much as the IPF and the exchanges are doing. But I don't have much visibility on that, nor would I like to comment. But most important, what IPF is doing is organizing these investor awareness programs and sending out literature continuously, booklets, everything. Like I mentioned, even for the blind and deaf, we are doing. Now, beyond that, we want to spread more awareness. We will try our best.
It's about 2 lakhs with a deposit guarantee, whereas it's 15 lakhs under IPF.
So that is precisely what I wanted to highlight to the investor, that dealing in the stock exchange environment is being protected to the best of its ability by the system, but yet accidents happen. We can't prevent that. Thank you so much, Hemant Bhai, Khushru, Dheeraj, and Hemanji for a very engaging session. And now we